welcome to 2025. I'm here with three industry heavyweights: Josh Elash of MT Finance, Adrian Moloney of One Savings Bank, and Marc Goldberg from Together. We put together a brilliant webinar last year, and we're looking to better that this year. So thanks very much for joining us, guys. We all look a little bit older, a little bit wiser than we did last time. Let's hope that we take this one a bit more seriously this year. And with that in mind, let's have a little bit of reflection on 24 and sort of what's happened there. So you're starting with you, Aid. Let's just cover off, how you think 24 went and what sort of success stories you felt were achieved by the industry and your business, really.
Yeah, look, I think 24 was okay. I think for brokers, it was very successful. You'd probably say nearly 90% of all mortgages came through the intermediary channel last year. That's got to be a good thing. We circumnavigated an election and then probably a budget, which the budget probably took the sting out at the end of the year. I think, you had two base rate cuts in there, which made a difference. And I think probably if you're looking at the busiest part of the year, you'd have gone August, September, October, and then probably it tailed off a little bit towards the end. But the good bit, plenty of competition. I think specialist lending in all sectors probably did well. I think buy-to-let probably performed better than most of us thought going into it. And I think that's probably as a result of it being a very much more professional environment. For us, we had good demand in all of our product lines. I was particularly pleased with what we did in the commercial and the bridging sector. And, I'm sure we'll come on to 25. Those are sectors that we see opportunities in 25.
Great, thanks. And yourself, Marc?
Yeah, it's 24. I mean, it was certainly less volatile than 2023. I think there were quite long periods. I mean, obviously, you had the general election, and then it almost felt everything shut down for 2 months. And then when we came back in September, the sad thing is everyone was then talking about the budget. I think the government did a brilliant job in masking. I think the papers did a brilliant job in masking. But the more people have had time to reflect about the budget, albeit it wasn't quite as bad as everyone thought it was, I think it's had a real negative effect, if I'm perfectly honest with you. And I think a lot of people are just sitting back and thinking, I think it's a shame they've increased stamp duty. National insurance, I think, is going to hurt a lot of businesses. But look, as we've said many a time, in every bit of adversity, I've always believed there's a lot of opportunities. So for me, 2024 was certainly a little bit more. We could navigate our way through it. I was really pleased. We've had some fantastic months together. I was really pleased with the number of customers that we've supported and our business partners. But there were certainly periods of lulls and sort of people, a lot of anxiety as to what was going to happen with the general election, what was going to happen with the budget. I think moving forward, we're now in a state, what I class is now a stable environment. And we can all build on the back of that, if I'm perfectly honest with you. But for one thing certain, the specialist market has grown in 2024. I think more of customers are falling into the specialist tag, which I think is fantastic for a lot of your brokers, Joe, and a lot of MT and One Savings.
Yeah, I agree. I do think confidence was still not recovered really. I think leading into the election, I think a lot of people wanted that change. When they got the change, I think people were still sitting on their hands, and there's still a lot of pent up demand somewhere that we're all waiting to reappear, which is an opportunity, as you say there, Marc. So Josh, how about your side of things? What do you think about 24?
Well, I think the guys have done a really good job on kind of covering the key issues. I think it's kind of funny. I think that 22 and 23 were so challenging that flat felt like a bounce. So I think last year, if we were to characterize it, it was stability. It was a calmer period after the volatile periods the preceding 2 years. I think the really positive takeaways from 24, in addition to the points that the gents have already made, really around volatility in the swap markets. It allowed us, particularly on our buy-to-let business, to offer greater degrees of certainty around pricing, around product, whereas the previous year and the year before that had just been such a period where the movements were quite dramatic and were quite constant. Where I think the movements that we saw in 2024, although were pretty consistent, were all relatively small. We actually had a couple of periods in there where swaps came in quite significantly, which allowed us a window during which we could offer some really very competitive, very attractive pricing on the buy-to-let product. So that was a big win for us as an organization, but also a big win for the broker and borrower community. Again, just other positives during that period. I think, we've mentioned the general election here in the United Kingdom. I'm going to actually, of course, point out the elections in the United States and the certainty that we now have off the back of that. And I think that ultimately the markets have taken a great deal of confidence in the Trump election and the Trump victory. So again, I think it was a pretty flat year. The main positives were that we didn't have so much volatility, and we have better clarity, better certainty on a go forward, not just in relation to the general election here in the UK, but also in the US. And I'm looking forward now to 2025, where I think there's an opportunity to build on those flatter, more calm foundations and create something bigger and better, and turn 2025 into a much more exciting and dynamic year.
I mean, that perfectly segues us into the next point, really. So looking forward to 25, then, Josh. Keeping with you, what do you foresee happening in the marketplace, and what opportunities do you see for your business this year, rather?
Well, it's an interesting one because, again, kind of echoing Marc's sentiment. I think there's going to be continued growth in specialist lending. We did see growth over the course of 24 across all of our business divisions. So that was really exciting. That was good. But I think that's set to continue into 2025. And I think part of that, again, is, the gents have already alluded to, is that an increasing number of people are going to fall into the specialist segment of the market for whatever reasons. Maybe that's a little bit of economic adversity. We're getting through that. People have missed payments, this type of thing. But maybe also because, more and more specialist lenders are being more sensible in relation to their criteria, being a little bit more dynamic, broadening the scope and showing greater appetite for different types of scenarios. But I also think, and speaking quite regularly with my colleagues on the capital market side of this business, that there's a possibility where there'll be a bit of a retrenchment in some cases. We've gone through a period where there have just been an exceptionally large amount of liquidity from a capital markets position. And I think that as we move forward into 2025, certainly the major credit funds and some of the traditional players in the space may be a little bit more selective about who they choose to back, which then may see kind of a little bit of a consolidation within the specialist lending space around the key players in that space, where the smaller players find it more difficult to secure funding, and the institutions choose to back the reputable, long-standing players with deep track records, which then creates further opportunity for us larger and more institutional organizations to increase our market shares. So I think that's exciting, and that's a tremendous opportunity. At MT Finance, we're looking to further diversify. So you'll be aware that we do regulated bridging, unregulated bridging, traditionally our major bread and butter. We're also diversified into buy-to-let 2.5 years ago, and we've seen that grow significantly over the last 2.5 years, particularly over the course of last year. But at some point later this year, we intend to diversify into the commercial term space, and we're very excited about the opportunity in that space. We see other people potentially retrenching from that space, but we think now is a really good time to enter that market. So, a lot of positivity around, growth opportunity, market consolidation, and diversification over here at MT Finance.
Amazing. Sounds really good. And Marc, what do you see from a Together point of view?
Yeah, listen, I think certainly for Together, we had a good year last year. Our focus is on growth, but in the areas we think we're experts in. We've always said we put the customer at the heart of everything we do. We focus very much on relationship style lending with our business partners, trying to find solutions and give them certainty. So I suppose from our perspective, I do think there is going to be a lot more opportunities. I agree with Josh. I think there's going to be some lenders that are going to find it difficult to grow and probably struggle with the funding. There's no two ways about it. We found that as a term lender, as well as a bridging lender, when the interest rate were rising on 14 consecutive Bank of England base rates, we've had to focus on our back book in supporting our existing customers, which is really important. So I think now we've come through this Labour government. I've heard from an economist that I spoke to this morning. They believe there could be as much as 4 interest rate reductions. Listen, I'm not saying whether that's for definite, but I can certainly see rates coming down this year, which I think will help existing customers, and I think it will help the market grows, certainly in the residential market. Buy-to-let, I know everyone talks about the stamp duty and it's going to stop people going into the buy-to-let. I totally disagree with that. I think the rental market is stronger than ever. I think rents continue to increase. I think if you're buying at the right price, you are a long-term buy-to-let landlord. I think the opportunities are vast for you to grow your portfolio. You can get good quality tenants. I think it's about how much you invest in the property and making sure you look after the property. EPC, I know, has not been the big focus, but again, I think it reduces energy bills for tenants. I think it will make your properties more valuable. So I think landlords really need to focus about quality and what they're going to do. And the bridging market, the short-term market, which is, I think, our expert subject, we continue to see a growth in that. But again, we're focusing on working with our business partners and existing customers to see how we can support them with their property needs.
Just very quickly, I just wanted to jump in there because I think the points that you've made, Marc, are absolutely fantastic. And one of the kind of the incidental kind of continuations from that thought process is that we've already had to bear out the adverse consequences of inflation. And that was, seen both from a market and a lending perspective as, the sudden hike in interest rates, swap rates, the consequence that has to the back book, the consequence that has to new customers, affordability, ICRs, et cetera, all of the adverse. But it takes a little while for inflation to find its way, which it ultimately always does, into rent and rental income. And that's already now started. So you're seeing the positive impact of inflation, that leveling out balance where rents are coming up.
Yeah.
Then ICR is much more viable. So it's a much more stable environment. So having endured the downside to inflation, we're now seeing some of the benefit of inflation following through to rents, which usually then also ultimately will feed into asset prices, which also has a positive impact to our customers who are interested in investing in properties, who are looking for long-term asset value appreciation. So I actually think you're absolutely bang on. I think buy-to-let is just going to be really exciting in the next 18 to 24 months.
And it's got to be more professionalized, right? That's the key within the buy-to-let. It's going to be more professionalized, which again leads me nicely into you, Aid.
Yeah, look, both guys have hit the nail on the head really well with some of the points that I was going to see. That the market is much more professionalized, and we completed one of our largest transactions this year in buy-to-let, £47 million. Now, they don't fall on your lap every day, but that's a guy with a portfolio like that. We hear people talk to us about big deals all the time in buy-to-let. To Josh's point, you can normally tell when buy-to-let's in the doldrums because you'll get a valuation back. People will question the rental assessment on there. I don't hear that noise at the moment, which stacks up with what you're saying, Josh, that the rents have gone up in line with inflation and that's settled. I think buy-to-let's quite exciting. I think size matters. I think it's really difficult to come into that market now. But if you're established and you've got your foot in the door, I think that's a good sign from a lending point of view. I still think PTs will be big because I think brokers have got into the habit of using the PTs that lenders offered, and lenders have made that process pretty easy and pretty competitive for existing borrowers. But there's a massive amount. This year, 25 is the biggest year in terms of reversions of fixed rates, not just in buy-to-let, but in resi as well. So there's a massive opportunity for the broker market. And, the way I see it, brokers are all over that. There'll be some borrowers that just want to go for rate. There's plenty of borrowers that, to Josh's point and Marc's point as well, have seen capital appreciation since 5 years ago. That gives them the opportunity to take money out and go on and buy. The word diversification came up from the two gents. I talked about our aspirations to expand what we do in bridging. Going to be listening and watching what the two guys do there in unregulated. And as I said, we've had big demand for our commercial brand Interpay this year, and I see that continuing. People have diversified into commercial assets. Owner occupied in terms of commercial is big for us. And actually, in that market, Josh has mentioned coming into it. It's a relatively small community. So if you get it right and you do it right in there, there's a good opportunity for lenders and brokers in there. And the other word was partnerships. For brokers, if you're not used to that market, there's plenty of people like Crystal that you can tie up with that have that expertise and those relationships with lenders that play in it. So I sit in 25 to the point that the two gents made, that 24 was a year of stability almost. 25 has big growth opportunities, I think, for those that play well and play hard in it.
Yep, agreed.
I think it's interesting because, you know, one of the things that we heard before, novice buy-to-let landlords, I think, is a thing of the past.
Yeah,
but investing in your existing portfolio, whether it's residential or commercial, I think is key for serious property investors, because you'll get an increased rent. Yeah, you'll get tenants that will basically stay with you. And, you know, so this idea of maybe second charges on residential and commercial type properties and investing in the existing portfolio, focusing on EPC ratings to reduce bills, you know, improve the value of the property, because there's no two ways about it. It will come in the future. So I think you need to be really smart. I think brokers need to be thinking about what the value of a customer is. And I think if they focus on good service, focus on making sure they're selling the right product for that customer. How many times could you do a transaction for a customer? Because every commercial customer has a residential property that basically needs a mortgage, needs a second charge, it's got a buy-to-let, needs a business loan, has some business where they're self-employed. The opportunities are vast. So I think brokers need to be really smart and in focusing on the customer, giving the right service and working with the right partner. I think, as you said, Aid, is really, really important.
The amount of people, you know, brokers and you speak to and they go, no, I don't do commercial stuff. And you go, well, you know, how many of your clients are self-employed? Oh, 50%. Well, there's a massive marketplace to tap into commercial business, as you said there, Mark. And the other bit where I'm, you know, there were a lot of things about the budget that probably weren't great. Probably the bit that came out less scathed than some of the other bits was buy-to-let, because the 2% on stamp duty is neither here nor there. If you're buying £1 million property and all of a sudden it's 20% on the stamp duty and you go, I ain't doing it because of that, then it's probably not the right investment. So I actually think when you reflect on the last budget, probably actually buy-to-let came out of it better than a lot of us thought. And I think for those bits that Mark and Josh and we all look at, those professional landlords, they're going, actually, I've got cash hoarded, I can borrow. Rates are still relatively cheap because there's so much competition in the market. And, you know, as I said, there's new players coming in. I think it will be tough for them. I genuinely do. I wouldn't relish being in that position. But I think for the established players who've got established relationship with landlords, they're going to be active in 25 and looking at opportunities.
Point that you've made there is bang on in that, again, if we're in an environment now where we're, for the first time in a number of years, we're actually seriously looking at value appreciation.
Yeah.
The stamp duty offset is like, okay, well, fine. You know, the income tax is a little bit higher, the incoming, but you know, I'm going to stand to make more off the back of this in 2, 3, 4, 5 years. So that there's an offset there. And I think the point that Mark made was really, really bang on, which is, you know, it's an incredibly tax efficient way of increasing value. And if you're ultimately an investor where you're looking at your strategy as acquisition of new portfolio or improvement of your existing portfolio, second charge lending is a tremendous opportunity to extract, reinvest, improve, create value in a way that there's no stamp duty applicable. So it's a really smart tax efficient play.
And I think one of the things that came out of the budget, and I've yet to see it. I speak to a lot of property investors and property developers. The biggest issue in the UK has been planning. Yeah, dealing with councils and the costs to develop and everything else. So if Labour are clear of let's get Britain building again, they have got a big job to do to sort out planning. Because I must say, there's a shortage of houses now. I think there's a shortage of houses, 2.5 million short of what numbers they had in the previous government. For them to say they're going to build 350,000 homes, you've not got a cat and mouse chance. And Britain is dying to build more homes. There is not enough homes available. So I do think it would be really interesting to see whether finally somebody can sort out what I believe is a broken system of planning, and developers are coming out of development now because it's just so bloody difficult. And you know, I think that is certainly something that we need to see what happens in 2025.
Yeah. And also, we haven't got any political uncertainty for once. So, you know,
it would appear not in this country.
Yeah. You just like to think there's a bit of confidence returning to to the consumer. Really, I think with some sort of a rate drop, 1 or 4 or whatever, you overlay that with no election or whatever it might be.
And
I
then
think
to the war in the Ukraine, touch wood.
Yeah, this
falling
year.
gas prices.
And I think the 2 interest rate rises, in my opinion, have kind of got lost.
Yeah.
I seriously believe that, obviously, because then you had the budget. I don't think we've yet seen the impact of that. So I think we've got February, 6th of February, I think it is, for the next Bank of England meeting. I hope we can all make a big song and dance over the opportunities now, because the lenders will react to it. I think the papers will pick up on it. I seriously didn't see a lot made of the last interest rate drops, and it has given, I think, a bit more positivity about the UK.
I think you're right, Mark. I think literally the papers are picking up more on, rocky inflation, really. And when you say rocky inflation, it's going from 2 to 2.2.
Yeah.
It's just the wrong message.
Good news doesn't sell newspapers. That's probably
no.
The one bit. I think, whatever way you look at it, where rates are today, and give or take 25 basis points either side, we saw the largest lender in the UK enter the new year with a 35 pip reduction on, that's in the prime space, on resi rates. That's not to say they're the cheapest. You actually have a functioning interest rate environment. Buy-to-let rates circling around 5%, whatever it is with the fee, and I know that differentiates, and residential rates around low 4s. That's pretty much the norm that most went into, regardless of that period where we had the 1 and 2% fixed rate. So what you've got now should be functioning. Affordability is there because people are still getting income. I take Mark's point, I think it was earlier, or Josh's, that the NI bit may affect certain businesses in terms of growth. But if you're in employment and stable employment, actually what you're seeing today is probably your affordability bit that's there. But lenders are competing for the business, which I think going into 25 is really, really positive.
So let's spin this around the other way. So what area of caution would you or your businesses aware of for this next year?
I suppose from my perspective, we're talking about, I know we didn't speak massively about technology, but together I think it's well known we are investing heavily in technology. But one of the things I keep telling my team and my board is we don't want to lose the special source of real people. So we want the tech to do all the work up until a decision, or when certainly in the specialist market where a decision needs to be made. So I think for me, I'm cautious about for me, the transformational program that Together are going on, the impact it could have on our business and our colleagues and our business partners. But the positive is huge. And I think, by working through that, but I think 2025 is the first year in a long, long time we have some stability. We know who the government is. We know, as Aid said, and I think he's right, interest rates now are stable. At the end of the day, even if nothing happens now, at 4.75 points for mortgages, buy-to-lets in the 5s. So I think there's a great opportunity. There's a shortage of quality housing. People certainly are struggling to get mortgages. So buy-to-let is definitely the opportunity. And I think investors are now, as interest rates have come down a little bit, they're not getting as much keeping their money sat in the bank. They see property as a long-term opportunity for growth. And, if you look at every single stat, house prices, although they've had some dips, pretty much they've gone up and up and up. So if you're a long-term investor, invest in property, invest in quality, and basically work with the right partners, whether it's via Crystal and the lending partners is really, really important to understand the market, understand where regulation is going. And for me, as I said, I am cautiously optimistic about 2025.
Great. Guys, anything else to add on that?
I just adding here, and certainly I empathize with Marc's comments around the tech journey, because we've had to go on one ourselves, and thankfully have largely reached the end of that voyage into darkness. But I think the key thing at the organizational level for us, if I may be candid, we've just grown exponentially over the last, decade, and not dissimilar, albeit at a much smaller scale than what Marc has experienced. I think the challenge for us is equally making sure that we retain that special ingredient that got us to where we were, that human component. And that really is around providing, the best possible service to the broker and the introducer community. I was having a meeting earlier today with my ops director, and we were talking about, the benefit of having all of these means by which brokers can shoot apps directly from their systems and get dips and how great that tech is. And I was like, that's fantastic. But my major concern in that is you lose that human element. You lose that one-to-one, the phone call, the conversation around a case. And when you're relying on automation, when you increasingly implement that type of thing into your organization, there is always that risk. So you really have to run like a dual track system where, you receive that application directly into the system, but you train your people to pick up the phone immediately. Don't just spit out the dip. Spit out the dip, but pick up the phone call and say, you should have just got my dip. Is there anything I should know? Is there anything I can help you with? How do we help? How do we offer you the best service so that in turn, the broker, the partner is equipped to go back to his customer and really just smash it? So I think that's kind of the big challenge. I'm sure we'll talk about tech in a little bit more detail. Hopefully not, because I'm not a massive fan of tech. But otherwise, and just much more generally, and it's the only last point I'll make about macroeconomics, I think a lot rides on the Trump presidency. We talk about political stability, and we keep referencing, the general election in the UK and economic conditions in the UK, but we mustn't underestimate the extent to which, globalization, the UK's fortunes at a macroeconomic level are very closely tied to what's happening in the broader world. And I think that the Trump presidency has tremendous potential to be hugely positive for the financial markets, for the capital markets, for the United Kingdom. But equally, when you talk about, the impact of tariffs, whether the war in the Ukraine comes to a relatively swift end or escalates, how we interact on a go forward with China. I think there's still kind of macroeconomic unknowns out there which have the potential to be, black swan or wickedly disruptive. So, having endured a lot of weird stuff over the last decade, from COVID to Jeremy Corbyn to, all kinds of other weird and not so wonderful things, I'm just always a little bit reticent to, overly get excited about stability, because I'm always worried about something popping out of the closet.
I think that the bit that would worry any business is the bits that happen that are outside of their control, to all the bits that Josh said there, COVID, etc. Let's hope we don't have any of those moments and we all get a chance to do a bit of BAU, because I think if we get BAU, we're all in for a particularly good year.
Agreed.
Bang on.
It's interesting. I was having a conversation. We took a decision in 2024. It was quite controversial. We said that we wanted all our colleagues working back at the office. It was one of the best decisions we ever made. The interaction, the customer service, the relationship with our brokers, getting stuff done. And I've read in articles over the last week, more and more businesses in the UK are now getting back in working from the office. It is definitely how colleagues learn. It's definitely how you get more stuff done. So I think that's another boost, that we're getting away from this. I'll choose what days I want to work, and I only want to work 3 days a week in the office. And I don't, at the end of the day, businesses survive by interaction, collaboration. So I do think that, again, is going to have a big impact for the businesses next year.
You've done it so well, Marc. Goldman Sachs are following your lead and getting them all back into the office.
Listen, Goldman's, Amazon. Listen, it was a big decision for us, and I tell you what, it was a difficult one. It was a lot of painful moments, a lot of difficult discussions with our colleagues. But I tell you something, our business is benefiting. I think we provide a better customer service now. I think we're having a better relationship with our broker partners. And I think we're interacting, and a lot of our colleagues are training and learning and getting much more out of it, which I think is really, really important.
Yeah, it's amazing that you've taken that step and that you've done that. And we need more and more people throughout the industry to take that approach, because one of the big pushbacks that we get here in London, whenever we're trying to recruit top talent, that's work from home policy. Like, that's a given. Like, we have a work from home policy. We don't have a work from home policy.
No.
I've refused to budge on that, and I do push back. And every quarter, someone from senior will say, "Hey, should we have a work from home policy?" And I said, "No, we've been fully back in the office since July of the original, pandemic."
Yes.
So it is important that we collectively show leadership, and we say, "Hey, our job ultimately, we're service providers. Yes, we provide a certain commodity to a certain part of the community. The best way that we can do what we're supposed to do well is by being in the office together and providing the best possible service to the broker community. You just can't do it if you're operating from 80 or 100 or 1,000, in your case, different locations. It's just impossible."
It's really tough, right? Because no two cases are the same.
Exactly.
So we, it's really hard to cookie cut that one, right? You need to have the walk across the office with the file and ask someone for help. That's
100%.
Go on, Aid.
No, I was just going to say that I agree with the guys, and I think the people that have thrived in our business, I particularly look at the people that we've recruited internally that have worked on things like the telephones that have gone out to be field-based BDMs. The reason they've got that opportunity is they've been in the office, they've learned about the various departments, they understand our business and they understand the market. And you don't get that 5 days a week at a home office. I agree with the guy. And the cities are really busy, right? You're in London, you're in Manchester, you're in Birmingham. Public transport is busy. The definite swing is people going back to work and back to normality for me.
Yeah.
Agreed.
So moving on to the next point, but we won't labour it too hard, is technology. So technology is a big buzzword, has been since COVID and Zoom and all the tech that came out of the 2019 lockdown. Talk to me about tech next year and what where your businesses are going with tech and anything that the broker audience should be aware of.
Shall I give you an update on where we are, because it's
right
in the public domain. So we've obviously partnered with Encino, who are building our new lending platform that will eventually go across all of our multi-brand strategy. The idea with that is it's about improving the journey into what the guys both said earlier is, not taking that human touch out of it, but taking the heavy lifting out of it. And there is some tech benefits out there, whether you look at valuation models that are on there, data scraping, documentation. Now, it doesn't apply to every deal that you do, but certainly, I guess, from a business of our size, and if you look at buy-to-let, we treat every case in the same way when we manually underwrite it. There are a number of those cases that don't need that intensity. There are a number of cases that need a more in-depth look. So if we can get that model right, which segments those cases into the right bits, it will work well. And that is all at the heart of investing in a broker-led platform, not disenfranchising the broker. Because I don't think any of us could sit here and go, we can do our business without the broker community, but we can make that journey quicker. I think Josh touched upon, his ops director talking about plugging into broker CRMs. I think this will be the year you see lenders start to do that. It will start in the prime space inevitably, because they don't want multi-keying. Can you key it in your own CRM? Can it feed through via an API into the lender system? And I think you'll see that move in the prime space. That doesn't necessarily mean we as specialists shouldn't follow that and adapt what's good about it. But what none of us probably want on this call is to lose that unique bit about being able to write a case for an underwriter, talk a case through with the likes of yourselves at Crystal. So I think, I still sit and I go around brokers, they say, he's got the best online system. They'll go, it's Lloyds Banking Group for their various bits. Those systems have been built for 20 years, which tells us that probably lenders haven't come along the journey quickly enough. But I think all of us will look at our tech stack and look at how we can make it better over the coming months and years to make sure you're not falling behind the crew.
Yeah. As somebody who is probably the least tech savvy person,
you're in good competition here, though, right?
But I hear, I mean, together we've really invested heavily, and we've got a lot of apprentices and certainly graduates, and they were taking me on an AI journey, which I didn't really understand. But when they're talking to me about programming and they're talking to me about the questions that you can ask, they asked me to ask a question as if I was a 5-year-old, and the answer it gave me, because the answer it gave me is just a normal question. I didn't really understand any of it, but when I asked it to ask the question as a 5-year-old, I couldn't believe it. I actually understood it. So I think, and one of the other things that I thought was one of the most enjoyable days of last year, we had a session where we showed some of our business partners, you know, the journey that we are going on with the tech. You know, listening to them, I went out for dinner with them in the evening about what the journey they're going on, how they want to work with more lenders to work out what they're doing and how they can interact with their systems, and, you know, what's best practice and how can we partner and can we do some testing for you and everything else. So I do agree with Aid completely. Technology is something that whether you're a broker or whether you're a lender, you're going to have to embrace it. Take away a lot of that heavy lifting and the data you can use, and it can help you make informed decisions. You get a better colleague outcome, a better customer outcome, a better business partner outcome. And, you know, from my point of view, and I'm sure probably from the two guys here, as a back book, the more data that you can get on, let's say, areas where it's not performing, you know, whether it's a type of job, whether it's a type of rental, it's a type of area and everything else, to help you make better informed lending decisions moving forward, or help you take bigger risks. I think it's super, super exciting. I think anybody who's not doing it will more fool you. But I definitely go back to the fact of this is not about taking away the human interaction. This is about getting humans to be able to do the work that makes every business really good at what they do, but get the tech to help you provide the data where you can make informed decisions is brilliant.
Yeah, I just carrying on from what the gents have said, which, you know, again resonates. I think that there's kind of two distinct components here. There's the kind of the CRM piece, which we're talking about, which is kind of the initial tech fixation. And I think that, you know, what we've learned is that can be as big as you want it to be. It's a never-ending journey, technology. It's not something that you build, you put into place, and then it's functional. Lloyd's banking systems notwithstanding. And the rate of change, the speed at which technology is improving is such that what we've learned is that you build something, and then the day after you think it's done, they're modifying and changing and adapting and improving. So I think as a lender, you have to be very pragmatic about how you approach tech. There's the original build cost. Then there's this ongoing kind of constant upgrade maintenance. The reason Apple issues a new phone every 6 weeks, not just for profitability, of course. But I think there's that second component, which we kind of alluded to, and I think this is really feeds into Marc's point, which is the role of AI. And where AI really has the ability to be disruptive and transformative to our space. So Marc's talking about data analysis, data tape analysis, backbook analysis. And there's already some really good AI technology, which will do what, you know, traditionally data scientists used to do, but it will do it in a matter of minutes, where you can drop an Excel spreadsheet in and ask for, you know, any interesting trends between geographic postcodes, LTVs, asset classes, and levels of default. And then again, as Marc rightly points out, that allows you as a lender to kind of take an alternative consideration and approach to how you perceive risk. Are there recurring trends? Are there areas where potentially you could be a little bit more aggressive, a little bit more bullish than you would conventionally otherwise be, because you've got a decade or a decade and a half or 2 decades or 5 decades worth of data to draw upon. And I think what we're doing now, having successfully kind of entered that phase where we're in that kind of no longer developing, but just constantly updating our CRM and our operating platform, we're now looking at, you know, how are and what are the interesting little pieces of AI out there that we can just dip into the business, just to improve efficiencies a little bit, get a little bit more out, just change kind of how we practice or operate in a little wins at a time. Nothing too expansive, nothing too big, but, you know, we're looking at 3 or 4 pieces and how easily we can implement them to our systems, our processes, and our CRM. And I think AI is really not going to be the be all and end all, but it will help drive efficiencies. And there's a tremendous opportunity for us to embrace that in 2025.
So it sounds like the customer journey will get better as a result of all these investments, guys. So it's exciting. I think it's another thing to look forward to in the coming years. So thank you very much for that. So look, I won't keep
one other thing, it will also reduce costs for I think brokers. And it will help, obviously, with customers as well. So that's really, really important.
Huge, which gets passed on to the consumer, yeah, as you rightly say. Really good. So I won't keep you much longer, guys. I just want to sort of end with your top tips for brokers in 25. If you guys can just give me, each a thought or three on what brokers should be doing this year. I think that's a good way of us ending this call.
I'm happy to start. I think number one is focusing on best-in-class customer service, focusing more on what your customer needs are. And if, as I think Adrian said it before, but to say, well, I do buy-to-let and I don't do commercial, I think you've got to be looking at what the customer wants and finding a product for them, or finding a business partner like Crystal who do residential, commercial, bridging and everything else. So I think very much about, for me, service, customer, cost and delivery, and basically, having a mission statement as a business and making sure the people that you work for you are all aligned to what your purpose and vision is really, really important, because they are ambassadors for your business. And I think it's really important that all colleagues are doing this, what you would expect them to do, because I think that is detrimentally important for your business. Great.
Aid?
I just looked at some of the sort of childish scribbles I put here at some of the key words that have come out here, and I think this is for brokers. There's an opportunity to grow by diversification and partnership in 25, to the point that specialist lending is going to grow, and there's plenty of opportunity out there. And if you don't do it and specialize in it yourself, look at those people that can assist you, because there's plenty of them out there like Crystal that can do that for you as well.
Pay your electricity bill, I think, would be my first one. Lights on.
that was someone literally turned the lights off of the whole block. They'll be getting fired later.
I think that the two guys have already made the really good points. I think, the advice that I would give if I were in a position to give advice, which I probably am not, is simply, just be very honest. Do what you do well, and then, when you're dealing with something that you're not particularly comfortable with, work with people who do that well. And I think that's, the secret ingredient. Yesterday, my head of compliance over here came and started asking me my opinion and questions on what he should do about his mortgage, which was coming to the end of its fixed rate. And I looked at him and said, "Go speak to a broker." And I think that's just an example of, listen, do what you do well. And when you don't do something well, or it's outside of your comfort zone, work with people like Crystal or others who do that thing well. And I think as long as you do that, there's so much opportunity in this market. There's going to be so much growth, particularly, again, in that specialist space, that it's just going to be a win.
Really, really top tips. Listen, gents, same as last year, a world of thanks from myself and the brokers who will utilize all this intel. It's amazing that they get access to you three big hitters for this 50 minutes. And I'm sure it'll go a long way to helping their years be much of a success as a result. So, really, really appreciate your time. I'll let you crack on with your days.
No, thank you to you and the Crystal team for putting this together, because I don't know about Adrian and Josh, but we really enjoy it. I think you're trying to do the right thing to help and educate and support brokers in the marketplace, which I think is great. And we'll do whatever we can to continue to support you and your brokers in making sure that their customers get the right outcomes.
Hear, hear.
All right, guys. All the best.
Take care.
Take care. Cheers, guys.